Welcome to the State of the Markets podcast. I'm Paul Rodriguez of ThinkTrading.com.
I'm Tim Price of PriceValuePartners.com.
So, Charlie Morris, welcome back to the show.
It's a pleasure to be here, gentlemen.
It's
Who
fantastic.
wants to go first?
Well-
Do you want to go first, Paul? Because I suspect you've got a truckload of Bitcoin-related questions up your sleeve.
I always have a truckload of questions, especially for Charlie. Well, Charlie got mentioned a few times, so he's a bit of a superstar, isn't it? So it's great to
Mentioned
have.
in dispatches.
Indeed. His ears must have been burning from our pod with Jonathan Escott. So, Charlie, well, you have been looking at you've got a system whereby you invest in Bitcoin and gold and various other things. So things must be looking pretty good for you.
Well, yeah. I mean, Jonathan Escott's great, and I really enjoyed that pod, and I got a couple of mentions, so I got in touch saying thank you, and then you invited me back on, so that's why I'm back here. So that's great. Yeah, Bitcoin and gold. I mean, I'm a gold bug since 1999. I went to a John Hathaway presentation, and that was that. And really got into it and started writing about it in Atlas Pulse since 2012. And obviously, I bought a lot of gold. I think I held the record pre-financial crisis for the largest ever ETF trade in London.
Really?
Which is $300 million. Yeah, that was when I was at HSBC. So I shouldn't think I still hold that record, but it was in a single ticket.
I mean, sorry to cut in, Charles, but we normally ask people to sort of give us a summary of sort of what they do and what they offer at the end. But I think in this case, do you want to give us sort of potted bio and CV now so we can put things in context for people who may not know you?
Yeah, sure. I was officer in the Grenadier Guards in the British Army, and I left in 1997, end of 1997, having done my last year in Northern Ireland. And I sat my city exams as soon as I finished. Then I got on a yacht and sailed to the Caribbean. The yacht had Inmarsat, so I got my results halfway across the Atlantic.
Wow.
And I passed remarkably. Then then I joined James Capel, which was HSBC, in the private client department. Grew from there in 2002, launched the Absolute Return Service. We grew that to $3 billion by 2008. It was fabulous times. And I managed to hang on for another 7 years after that and left in 2015. My first offer came from Merrin Somerset Webster to become the editor of the Fleet Street Letter, which I wrote for the next 6 years.
Oh, wow. I didn't know you did that. That's interesting.
Yeah.
Is that the longest serving financial newsletter in the UK? Something like that?
1937, yeah. Or 8. And I brought that over to my company, ByteTree.com. But in the intermittent years after HSBC, I did some consultancies with other firms and that sort of thing. But ByteTree, we're a research company primarily. And, what you were just asking me about, we have an ETF that combines Bitcoin and gold.
You're bold. And I remember you talking about it before. But could I just ask, you said...
Gitcoin.
Yes. You mentioned that you were turned on to the idea of gold by I can't remember what you actually said, but what was the sort of aha moment in the seminar I think you said you attended?
Yeah, 1999. I was, freshly out of the army, not a financial guru, although I had been an enthusiastic private investor for some years, reading everything, reading the books and reading the Investors Chronicle and all those sorts of things. And I did my STA exam, Society of Technical Analysis exams, Paul, which you'll be pleased to hear. Mm-hmm. Same year. And John Hathaway just made this case that the debt was building up in the world. This was 25 years ago, and the dollar and all these usual arguments. And he said that the gold price had been falling for 20 years. And the European central banks have been selling in unison, driving the price down to ridiculously low levels. He made points about gold as a tiny percentage of global assets and stuff, which in 1999 it was $255 an ounce at the low, I think. And I got interested. And, even though I only had a topic 3 terminal in those days, I didn't get a Bloomberg till about 2001. One of the things it had, other than the UK stock market and little else internationally, was the sort of gilt yield and the gold price. And I started following this thing. And my technical analysis skills, which I had learned with the STA, showed me this thing called a 200-day moving average. And in about 2001, it turned positive when the market was dying. And so, we were enthusiastic owners of gold equities, which, was the Merrill Lynch fund in those days, now BlackRock. And you couldn't own a gold ETF. That was launched in 2003 in Australia, I think in the spring, and then in December in London, and then in 2004 in New York at the end of the year. So that was the beginning of Gold Mania. And I think it was still around $500 or something, if I remember correctly.
So when gold topped out in 2013, obviously that was a big consolidation before a really sharp move down. Now I'm gonna guess that you spotted some of it because of the technicals, but did it in any way shake your view of it being a long-term asset in the way it went down? Were you looking just to accumulate more as a long-term opportunity?
No, actually, I called it in one of the first episodes or issues of Atlas Pulse. And at HSBC, I had a massive weighting in gold. And we cut it down and it was over 10%. And we had some silver and stuff as well earlier that year. But by January of 2013, before the break, our weight was 1%. And
brilliant.
Why did I keep it at 1%? Well, emotionally, I found it difficult to be zero. But, so we had sold the vast majority of our gold before the break. And I covered it at the time. And then I built this model, which was based on the tips, the US 20-year tips. And that model worked really well until the war in Ukraine. And now you don't really want to know what gold's worth on the basis of the tips model today, because it's a pretty frightening high number compared to the gold is a very high number compared to the tips model. But the thesis is that things have changed, but we can come on to that. But
you've said it, Charlie. You got to tell us.
Yeah, the cat is among the pigeons now.
Okay, so I'm
I'll tell you what. Let us know near the end, so that will you just keep us in suspense until later.
Yeah, let's come back to it.
Yeah.
But in 2013, it was very obvious that real interest rates had started rising. And by that, I mean the bond yield started climbing, because it was the first talk from the Fed about the fact they were going to hike rates at some point, having been, zero forever, been the narrative before that. And so, inflation collapsed as well following the Eurozone crisis. So you put those two together, interest rates were much higher and rising faster than inflation. And gold doesn't like that at all. And so this was a cause for the gold price to break. We also started to see outflows appearing from the ETFs and such like. And so it was pretty clear to me that the gold was going to have a bad time. And it was after I ran a momentum fund into the credit crisis. And that's another story which I've been writing about these last few weeks. But it occurred to me that the momentum investing was a natural opposite to gold investing.
Now, when you say momentum, sorry to cut in, just what is your definition? Is it a stock momentum or just market momentum?
Yeah, so relative strength in the market, owning the leadership.
Yeah,
and the leadership is Tesla and Nvidia and that sort of thing. And back then it was very different. It was in 2008. It was alternative energy and commodities and those sorts of things. There was some tech in there, but not nearly as much as today. And that broke, and it kind of it realized that and momentum started to take off again in 2013. There was an interesting moment that year during the European crisis of sort of 10, 11, 12, that sort of era. The S&P 500 was more volatile than the NASDAQ 100. So the NASDAQ had been the laughing stock of the 2000 to 2008 era of this sort of none of these things make. It's a bit like crypto today. Then suddenly the biotech companies came through, making billions from nowhere, and then the dot-coms came through making billions and billions and billions. And so this NASDAQ couldn't give a damn about the euro crisis. It just said, well, we're making money. Don't know about you. And it would be, the dollar was starting to be a stronger environment. That didn't help gold either. And so you had this very interesting situation where tech was basically extremely resilient and has had a 10-year run since. And it occurred to me that when gold was falling from the peak in August 2011 to the trough in 2015 was a very, very good period for growth stocks. So I came up with this strategy and I wrote about it in the Fleet Street letter about golden growth. And by which I really meant golden momentum. It's growth is a moving feast. It's not the tech sector. It's the tech sector at the moment. It could be the commodity sector, or it could be Japan in the 1980s or whatever, wherever the momentum is. And this idea that if you intellect gold with the momentum trade, you come up with a fantastic outcome. And I discovered Bitcoin in, I don't know, 2012. Thought it was a joke. I was introduced by Tom Paxton, a sort of hippie economist, and I said, don't be ridiculous. And then I came back a year later and realized I was spectacularly wrong. I realized you couldn't cut and paste it on the internet, which is what I assumed, because Bitcoin doesn't have a serial number, it has a provenance. And once you understand that, that's the blockchain and all and those sorts of things. And I thought, this is amazing. And I was writing about gold and Bitcoin, as I have done for ages. And I just realized you could combine them. And I had some experience in a consulting for a firm called Atlantic House, a derivatives firm. So it got me thinking about what volatility meant in a way I hadn't really thought about it before. And I realized this whole concept of risk weighting. I was well aware of it, but it really, the penny really dropped after that. And by doing risk weighting, and so our bold index is basically 3/4 gold and 1/4 Bitcoin, because Bitcoin's has loads more volatility, which means that if you have $100 invested in the bold strategy, your chance of winning or losing $10 in your gold or your Bitcoin are theoretically the same. That wouldn't be true if you're 50-50. You'd be much more likely to win or lose $10 in Bitcoin than gold.
How are you measuring volatility?
We use 360-day volatility, realized volatility. And the reason it's 360 is that, 30-day volatility is volatile and 90-day volatility is volatile. 360 is quite stable. So what you're doing is you're measuring the quality of the asset. You're not trying to get a tactical signal. And so, Bitcoin used to have annual volatility of, 150% in 2010, 11. And nowadays it's 40 and gold's 15 and the world index is about 13.
And so how often do you then re-weight? Because obviously we've had 6 months of Bitcoin doing nothing, and then this big breakout, which technically it was looking like it was on the cards. But obviously that's changed the volatility profile massively.
Yeah, it's a very good point. And we do rebalance the portfolio for every month. So the index company, Vinter in Sweden, calculate the index D-5, so that's 5 days before the month end, trading days before the month end, and they tell us it remains confidential until rebalancing, and then after that we publish it, and that happens at the same time as the London Gold Fix. So if Bulls was quite a small strategy, it's just under $15 million, but had it been a $15 billion strategy, which it should be if it wasn't banned in most jurisdictions, then we built and managed that trade because they're two massively liquid assets, and we trade at the fix.
So when you say is it because Bitcoin is banned to be traded in certain jurisdictions? What is actually banned?
Bitcoin ETFs are banned.
Right.
So it's an ETF or an ETP, technically an exchange traded product in Switzerland, but it's not banned. But basically, it's not, retail investors can't buy it on UK platforms.
Yeah, I see exactly what you mean. Yeah.
To change the subject slightly, but perhaps not very much. I get the feeling, my own feeling is that we've had some quite pronounced moves in the week or so since the Trump 2.0 administration was confirmed. And that suggests to me that the market was positioned not for that outcome. There was a lot of shorts were covered, or there's been some quite pronounced moves either way in currencies and in stocks and bonds and gold and commodities and the dollar. Do you think that the sort of Trump euphoria is kind of a little bit overdone now, a little bit overblown?
Well,
because there's this sort of, I get a sense that he can do no wrong. I'll give an example. There's a story in today's FT about RWE saying it's going to sort of cancel some however many billion of renewable investments it was going to make on the basis that the sort of the mood music has clearly shifted against the sort of net zero momentum. And I just wonder whether, which I think is, I'm all for it. I think it's great, and I think the Trump news is very encouraging. But I just wonder whether expectations have become so pronounced now that, all we can be left with is disappointment.
Yeah. So what's the biggest winner, apart from Dogecoin, of the Trump election, resounding election? They've got the Senate now as well. And unquestionably, people would point to Bitcoin. But even better than Bitcoin was Tesla.
Yeah.
And
I was going to say all things Musk related.
Yeah.
So he went out on a bit of a limb and has been rewarded for it.
Yeah, and so to say, and then alternative energy stocks have all done badly, apart from Tesla, which is quite interesting. And so I don't think the Trump administration is anti these things. I just think they're economic. if you know what I mean. So if you're building wind farms and solar panels for idealistic reasons with government subsidy, I think that's no longer a good idea. But if you're doing it for economic reasons because you found a profitable way that makes commercial sense, then that's fine. And so I think that's a difference. Oil, interestingly, hasn't gone down, but we've seen most other commodities go down. So we've seen the gold price go down whilst Bitcoin went up. And by the way, a point I didn't get to, these are natural opposites. Best friends, in other words, who own Bitcoin and gold together because they move in opposite directions. And this yet again proves it. And we've also seen weakness around the world in European shares. We've seen weakness in Chinese shares. Small mid cap in the UK hasn't really done too well out of this either. And then the friends of Russia, so not necessarily the friends, the borders of Russia, shall I say, Ukraine, the Stans, Georgia, those sorts of stock markets have done very well. And then it brings us to the S&P 500. Well, it's up a bit, not a lot. Most of the FANGs haven't done that much, but a few Sadet stocks have done well. Tesla, I mentioned. Palantir's done very well, which is a Peter Thiel, right-wing tech bro stock, which is all about data. And this whole Musk Department of Government Efficiency, DOGE, hilarious joke, is going to save $2 trillion. So this has changed the narrative in a big, big way. Let's not forget that the Musk went into Twitter and fired 80% of the staff. It's now bigger than it's ever been. And he also put a space rocket into the orbit on a shoestring from an island in the middle of the Pacific. And if you read the story about that, it's really quite extraordinary how he did it. So this is a guy who knows how to save money. And by God, I'm sure all of us would agree there's plenty of savings to be made in government if you had the right guy put in charge to do it. And with debt GDP out of control and these sorts of things and deficits crazy, if the idea is that the budget's going to be balanced, which is all you need to do to pay off the debt, you let inflation do the rest over the long term. You just need to balance the budget, as Milei is doing in Argentina. Is doing in Argentina. And then eventually the budget will take care of itself if you just balance the books. And they did this in Northern Europe. The Scandinavians and the Dutch have got their debt GDP down. It's only the UK and the South and the States that have really got this vast problem. And so I think that, the gold market's looking at that. The dollar's gone up. Real interest rates have gone up. And there's a peace dividend associated with the war in Ukraine, which, let's face it, has caused a lot of money from the central banks to come into gold. And then now you've got a balanced budget on the horizon for the US. So, yeah, lots changed, Tim.
From the sound of it, what I get from that is that you think that there's a lasting dividend will come from the Trump administration. I just wonder whether, I don't disagree with that, but I just wonder whether expectations are so overblown now that they can only be disappointed.
Maybe. So the S&P 500
shrinking the largest state in the world isn't an easy thing to do.
No.
The nature of bureaucracy being what it is.
Yeah, but you've got Musk and you've got Palantir software and you've got Musk and this sort of stuff. This is new. This is worth a go. And you've got inspiration from Milei, who's in the club. So you've had Latin America, Mexico, and Brazil stock markets not exactly happy about the Trump victory, but Argentina are. So, friends of Trump. And he's going to throw these tariffs around as negotiating tools. I think he's exaggerating on how bad they'll be. But he'll say, well, China, if you want to trade with us, then do this, that, and the other. Else 60% tariffs, mate.
Do you think that the Trump victory changes anything about the political dynamic in, say, the UK or the EU? Because it seems to me that we're if we just take the sort of Starmer administration, we're playing an increasingly lonely field of sort of Marxist net zero insanity, and there's no mandate for this. This is something that both Conservatives and Labour have taken upon themselves with no popular mandate by the people. Do you think there's a likelihood that some of this will be quietly sort of shuffled into the long grass too?
So let me go back to 2019 to the Conservative, Boris Johnson's Conservative manifesto. And point 6 in the manifesto, not point 1, which is what it feels like, but point 6, to be a world-leading power to cut emissions to virtually zero by 2050. Okay, on that news, the Lib Dems and the S&P got in front. They gazumped them and said, okay, 2045. And then Labour said it should be in the 2030s, and the Greens want it in 2030. So you had absurd competitive politics. So 2050, whatever you think of net zero, it's plenty of time if the technology can be built to create net zero in 25 years. Fair enough. And this was 31 years in 2019, and you can achieve a lot in 31 years. But the idea that the opposition's just sort of forced on them this accelerating timetable to look good in the short term without thinking it through is totally absurd. Now we've got the COP26 thing in Azerbaijan, so you can tell because that's where all the private jets are, and Sirkir will be there on his own. I think he's the only notable world leader who's bothered to show up to this thing, and it will be telling that. I think the opening speech was, natural gas was a gift from God by the president of Azerbaijan. I think that's what he said, and. This is sort of interesting because the difference between productive alternative energy, and don't forget there was an alternative energy boom in 2007-8 on the high oil price, nothing to do with government subsidies, because the world wanted alternatives at that time, and this time it's all about subsidy. And didn't Labour mention they were going to spend 20 billion on burying CO2 in the ground? I mean, this is just totally absurd. And a complete waste of public money. And I can't imagine I don't know anyone who thinks it's a good idea. Even my greenie friends, they think it's absurd as well. And it'd be like in 2,000 years, someone will dig up this hole in the ground full of CO2, and they'll say, "Oh, thanks very much. We need that for the fizzy drink industry," or whatever. But it's that is not productive use. And then the other side of it, of course, is we can already cover all the electricity in Britain on windy days. But I gather we're building 10 times more, so we're going to have huge surplus on windy days and not enough on other days. And it doesn't make any sense. We all know this, and yet they're forging ahead. I think having Trump come down and say this is stupid is very helpful because he's the first major leader to say it in a very long time.
It's like someone's just waved a magic wand and people have suddenly woken up to stuff that some of us come to conclusions about quite some time ago. The world's been under a bit of a spell. Yes,
absolutely. You put it well.
Yeah, the whole idea of electric cars has been one that we talked about. And I think most people who listen to this pod have a good critical, understanding of certain topics that we discuss and are willing to think for themselves. But, we came under some flack for suggesting that electric cars might not be ready for wholesale taking over of the petrol engine. And
but also they're not as green as they're made out to be.
Well, yeah, exactly. I mean, that was always your argument from the get-go. It's like, where's this electricity coming from? But from a more technical point of view, electric vehicles don't work well when it's very cold. And also they require more strain on the batteries when it's very hot. And then they're also extremely heavy, because those batteries of, as light as lithium ion batteries are compared to lead acid batteries, they're still very heavy. And then you've got the problem of the chemicals that are in them and the metals that are the rare metals that are in them, and then how you end up recycling them at the end. It's all well and good having a brand new shiny electric vehicle, but what are you going to do, 10 years down the line when you've got all these electric vehicles that need to be recycled or have their end of life dealt with in a positive way. So in a positive way for the environment, if you're going to be thinking in a green term. So it's really like, and there's not enough charging stations for, if everybody moved over, it would be a nightmare in an actual infrastructure. There just isn't, people haven't thought that, look at a block of flats. If everybody in those blocks of flats, or not every single person, but if a lot of people in a block of flats have got an electric car, how are they going to charge it? It's very, very difficult to charge. And then you look at all the, say, places in London where you can't even park in your road. You can't guarantee a parking space. You can't guarantee a charger. And it just goes on. So it's a nice idea. And I think it will work for certain use cases very well, like when we've got AI electric cars driving around instead of buses, and people hop in and hop out, and they have the equivalent of that Uber style self-driven car, which is probably 10 or 15 years away, but I think that's that's where we're going to go with it. But when it comes to actually owning a vehicle yourself, it's relatively niche, possibly more niche than people realize. And I'm sure that there's some great use cases for people who've got a driveway and they live slightly further out in the country and they do a 15-mile or 10-mile drive or a smaller round trip in London and they have the same. It could work extremely well, but we're not talking about niche cases. We're talking about wholesale change from petrol to electric, and it's just not workable. And it's, as you say, people are finally waking up to that.
Yeah, I mean, my thought about electric cars. I mean, I've had the pleasure to watch my father-in-law design one. First, he's had a petrol sports car which he designed many years ago as a sort of hobby project. Then he made it hybrid. It's a high-performance car, and has recently made it EV. And he's just recently turned 80 and is now falling in love with the idea of EV.
What a legend!
It goes like shit off a shovel, and I think there's an inevitability about EVs. We'll all end up there. And, you've got the sort of potential for hydrogen, which some people scoff at, but Toyota aren't daft. They like it. And then you've got the battery problem, you say, but then the batteries are getting better. And then the best EVs in the world are coming out of China, and everyone wants to tax them to death rather than say, well, that's a good EV. And I was recently in Uzbekistan, and I went in one, which I think it was called a Li. And inside, it felt as comfortable as a Range Rover, and it was just full of technology, and it was really quite an incredible car. And I sort of felt that if you are going to legislate for EVs, you kind of want it in cities for urban air quality. That's the sort of priority right now. It's nice to have EVs in cities for that reason, and buses and all the rest of it as much as you can. So, people want to have clean cities. I get it. But if you live in the countryside or whatever, then why should those rules be as important? They're not as important if you live in the outskirts where range is more important and this sort of thing. To your point on the cold, I mean, Norway's been a big adopter of the EV, so I guess they can live with it. But I think my biggest problem is this is just a private sector societal change which should happen at the natural pace. You don't need to be told it must be done by 2030. Car dealers don't need to have targets on how many EVs to petrol that they sell or diesel that they sell. This is absurd. In America, it's much freer, and there is an increase in their growth rate of there is an increase in adoption of EVs there. It seems to be working. Just leave the market to its own devices. And I think we'll all end up with electric vehicles in many years to come. And if there's a need for petrol vehicles in certain places, for example, JCBs in the middle of the desert or something, diesel vehicles and so forth, then fine. We'll get there anyway. But this whole idea of accelerating change with subsidy and policy is just dangerous. And it's why America is 50% bigger than it was in 2008 as an economy, and Europe is not. It's barely grown, and the more regulated the country, the slower the growth rate. And there are three ways to increase productivity. Three things we need. One is cheap energy. You guys know this. The second is less regulation, and the third is lower taxes. You do those three things, and you're going to grow your economy.
But the direction of Europe is going in the wrong way on each of them.
Absolutely. And anyone with half a brain can see that. And if anyone got half a brain, we can give to Ed Miliband.
I think the thing about electric vehicles with regard to batteries is not that they don't work in the cold. It's just that they're not as efficient. And I think until I own a hybrid, so it works with a battery at below 20 miles an hour, but it also gives it a boost of power and supports the petrol engine. So it's, in all intents and purposes, it's a petrol engine car. And that means that you don't have this range anxiety problem. If you're sitting in an electric vehicle and it's really hot and you're looking at your battery level, which might be reading, say, 70%, and then you're going on a 100-mile journey and then it's really hot, and then you put on the air conditioning and it starts to go down really fast, you've got some planning to do about where you're going to stop. If you're in the desert, my God, I wouldn't want an electric vehicle in the desert at all. That sounds like a recipe for disaster. There's certain places you go to, if your car breaks down, you die. and that's why Toyota Land Cruisers are such a popular choice for areas of say desert and in Australia, because literally.
Well, I thought you could say that they're for terrorists.
Yeah.
Right.
Yeah, they're virtually indestructible, as we've learned from Top Gear. When they did that, they literally tried to destroy this Toyota Land Cruiser and couldn't. They even dropped it from a building and it still worked. It was just incredible. I mean, the engine turned on. It obviously didn't work, but it was just incredible how strong it was. But anyway, I digress. It is until you've actually driven one and had that range anxiety, people that I know who have them and are well within the parameters of the journey for electricity, still have that, will we make it on time? Remember, every journey can end up with, there could be an accident that means that you're stuck for hours going very slowly. What are you going to do if you start to run out of power? There's literally nothing you can do. And you might say the same with petrol, but you can always, there's always a petrol station much closer at this stage. And so it's just an infrastructure problem. But in the end, as you quite rightly say, let the market decide, make a better product, and then people will naturally move to it. I mean, nobody was forced to buy iPhones because they wanted to move over from subsidies from the old style Nokia phones. They bought them because they were better, and that moved the market forward. So I think also you're absolutely right. Battery technology, there's so much money involved in this. If you design a more efficient battery, which they have done already, the only problem with the batteries that they've designed at the moment is that they have a tremendous amount of power, much more power than the current lithium-ion batteries, but you can't. They all have a recycle life, so there's a certain amount of times you can charge them up and discharge them. And if you do that too many times, the battery will just become worthless and useless. So if you so the new batteries have got that problem where their recycle times are not as much as lithium-ion. Obviously, you need thousands of cycles or something like that for it to be workable. But once they crack it, and they will crack it, yeah, it'll be really interesting that if we have super light batteries with a tremendous amount of power that can go, a long way, then that'll be it. But then we come back to Tim's point, which is a valid one. Where's all this electricity coming from? And again, the point that you've just made, there's a storage problem with power. It's not so much a production problem. It's how do we store it when everybody wants to charge and everybody's on the grid at the same time? And that's the green issue doesn't solve that problem. Traditional fuel does solve that problem, but we're moving so far away from that. We are ending up with a potential problem because you're encouraging people to use electric vehicles, and I'm sure most people want to for the basis of it being clean. But what about when everybody wants to charge at the same time and the grid is overloaded?
There's quite a lot to unpack there, but I think that I just got it up on Google. So the Neo ET7, the one Chinese electric cars with a 150 kilowatt battery pack, can go 1,044 kilometers or 649 miles on a single charge.
Yeah, I bet
so
it can't, though.
The cars you're referring to are European and American and ex-Tesla motor manufacturers who have just sort of rushed into this space because of legislation. If you allowed them to do it properly and naturally, I'm sure they'd have had better cars than they currently have. And they distorted the market and put these guys on the back foot, and then a whole load of rules at the forecourt and made their life extremely difficult. I think we've gone a long way to destroy the European car industry through policy in places like the UK and the EU. Whereas China have got these cars and they seemingly are amazing. As I said, I've been in one, and they've got the range. So, allow it to be a free market, and we'll have good electric cars. I'm not anti-electric cars. I just think that they should, they will all come if we let the market do its thing. And governments are really in the way here rather than trying to accelerate it. They're probably making the situation worse.
Yeah, I totally agree. I'm not anti-technology or electric cars at all. All I'm saying is that number that you've seen there for the range, and for most people who see the range, that's like in the old days when they used to talk about cars efficiency or miles per gallon. being whatever it was, 46 miles per gallon. Well, that's in an ideal situation, doing a constant 56 miles an hour in the small print. Well, it won't be in a super hot or super cold environment, and it won't be, with you listening to the radio, it will be done. So that's the absolute maximum they can possibly get, not packed with your family in there and having, luggage in the back. So yes, that's right. That is a nice big number, but I think practically you don't get that. And remember that is the maximum once you've bought the vehicle. That's never going higher. It's only going lower from there because the efficiency goes down.
Yeah, no, I agree with all that. I mean, the storage point you made earlier and the electricity generation, what are they doing in America? They're turning 3 Mile Island back on, not with public money, but Microsoft money.
Yeah.
And, here, we're scrambling to build data centers, but they can't get the electricity. I have a friend who's involved in the real estate side of data centers, where you have to sort of get the planning permission and get the electricity and get the land in the same place at the same time, and then off you go. And it's a very profitable exercise if you can link those three things. And the electricity is the stalling block. And genuinely, the Labour Party want us to travel less and consume less energy. And it comes back to economics 101. The only way that an economy grows is by converting energy into capital. And, so you need lots and lots of cheap energy. And if you're not increasing your energy consumption, you're not increasing your economy. It's as simple as that. So you cannot grow by being miserable about energy. You want to find, great ways to produce lots of it. Storage is one of those things that's funny, isn't it? Because they sort of talk about these huge battery grid storage places, which, will light up the country for 6 minutes or something. I mean, I don't know the stats exactly, but it's just, they cost hundreds of millions. And it's just unrealistic. Something's going to cost trillions to cover the grid for a 2-week spell of low wind. Well, that's just stupid. And so, but good solutions will come. And I keep reminding people that you can, at a high cost, you can produce hydrogen from surplus wind. So your energy is basically free post subsidy. It's not free at all, of course, in real life. And the other thing you can do with surplus electricity is mine Bitcoin. You can't store the electricity, but you can store the money.
Very good point. Very good point. And I guess Bitcoin becomes a store of energy in that regard.
Yes, financial energy. Yeah.
Financial energy, yes. Yeah. Well, isn't it interesting, actually, with regard to that whole argument about it being a big, not very green, and its use of electricity was rivaling small countries. We don't hear that anymore, do we?
Well, AI came up. So the joke about all that was that the ESG indices, couldn't put enough Google at the top of the ranks. And these guys, have been very quiet about it, but they use truckloads of electricity and always have done. And now with AI, that just doubled basically, or trebled, or whatever. And it's so IT generally, compute power is going to be the biggest consumer of energy before too long, I would think. Perhaps even challenging transport one of these days. So that is enormous. And if you want to stay in the 21st century and not be terrified of the 21st century, well, you need to understand what Bitcoin is. I mean, the US are going to have a strategic reserves, a reserve of Bitcoin. They've got over 100,000 Bitcoins through confiscation, worth about $20 billion. And it's going to sit next to its pile of gold in Fort Knox, is the thought. And here in Britain, it's still banned. You can't buy an ETF. It's completely absurd. We are terrified of the 21st century. You can see it in the growth GDP per capita stats since 2008, and you can just see it in the policy. There's no attempt to get the cost of energy down. I think Miliband genuinely thinks by putting up more windmills, you will get cheaper energy. It's just not true. You will get more energy for sure. You'll get more cyclical energy, but it will be more expensive to power the homes. And it won't solve the problems you talked about, having everyone can charge at the same time. I mean, okay, so we can all charge on windy days and then just make our battery last. Is that it? I mean,
the war on established energy seems to have something, I would say, has something in common with, to make a sort of particular political point. One of the things that came across in the the Reeves budget was effectively a war on small farmers as well.
Yeah.
And the two other politicians that are notorious for having declared war on farmers are Stalin and Mao, and we know what the upshot of each of those occurrences were. So the way I sort of see the world now is, particularly in light of the sort of the Trump stuff, is the old coinages of left versus right are completely irrelevant because they speak to a bygone age. The issue now, and the fundamental issue, is: do you believe in big government, or do you believe in the rights of the individual? And you can't have both. And if you believe in big government, then God help you, because that's what we would have had under Kamala, but it's what we currently have under Starmer and the EU.
Yeah, I mean, big government, the Scandinavians do it quite well. I mean, you go there and, it's a wonderful place and the streets are clean. But I think, if all it is a welfare state, then that's really not the way forward. And it's the politics. I mean, Trump gets that. Trump is not traditionally right-winged, nor is Nigel Farage, although they're both described as far right.
But sorry, on that particular point, they're labelled far right by a legacy media that I think the Trump victory shows, at least in the context of the States, is becoming increasingly irrelevant. And a great example of that is the fact that The Guardian yesterday proudly announced it was leaving Twitter, or X. And you think, well, way to show your own irrelevance.
Absolutely. And I think that you've got these, if you look at the Trump vote, it wasn't white male pickup truck driver.
It was everybody.
It was everybody, and it was lots of Hispanics and lots of blacks, and he captured the nation. It was just a pissed off nation who realised that whatever the current system is doesn't work for America.
It was another Brexit, a Brexit 2.0.
Absolutely. It was absolutely another Brexit, and on top of that, it's what we saw from that is you could see exactly why people were pissed off with Biden. And you could see how the media was trying to twist it for such a long time. Even people that I spoke to and mentioned how he was floundering, and on a level of feeling sorry for an old guy. If you look at it like that, he should never been put forward, not again, and not put through this whole thing. But the media just didn't want to know. They right towards the end, they pretended that everything was okay, and they thought they could just force it through. What they've learned there is people aren't stupid. The man on the street and the woman on the street can see through all of that, and they just think that as long as they control the narrative and have as many negative comments about the opposition, and you can sway voters. And it's just, again, it was like with Brexit, they just did not get it, and it's. Legacy media is just showing, as Tim's saying, how little power they used to wield. A ton of power. I mean, the Sun in this country could decide an election. The Guardian are complaining that X can decide an election. Now that is not fair at all, because that's been done with legacy media since the beginning of time. So to now complain that you've got this online platform, what they're really upset about is.
They've got no influence anymore.
They've got no influence. So what they're saying is there's more hate on X. Well, of course there will be. If you're allowing both sides a voice, then you're going to have arguments, and that's what you need. You can't just say, "Oh, this is such a really lovely safe space," because we've shut down half the people we don't agree with. You can't make that decision about the other platforms. Or anything else that's out there. The internet.
Well, free speech isn't relative. It's pretty much absolute. So, subject to sort of being constrained by the rule of law, which I don't think anybody has a real problem with, then anything goes.
Yeah, exactly.
So
and you
there's
said
this thing called Blue Sky, which is being done by Jack Dorsey, who's personally I think should be in jail for what he did during the time he was in office at Twitter, for sort of cancelling people against, I suspect illegally, on the terms of the US Constitution. It's a sort of safe space for millennials and whatever, Gen Z, but who cares? It's like yet another echo chamber of the sort that Twitter was accused of being. But I think the Elon Musk tidying up exercise has shown that it's now basically for everybody. And if you don't like stuff, the mature way of dealing with it is you just don't follow them. It's quite straightforward. You don't have to listen to everybody. And in the words of Churchill, you don't have to throw a stone at every barking dog you go past.
And then with Kamala Harris, when she came in, as obviously nobody voted for her, and I think prior to the when Biden was in power, people, I don't know, I'd heard sort of rumblings of people saying she was not that good and whatever. And I would like to reserve judgment with that, because I think you need to have more research about who a person is. But certainly nobody had voted for her. But, Trump went on the Joe Rogan podcast, which I watched. It was a 3-hour discussion. Kamala Harris turned her nose up to it effectively by forcing the terms of that. It doesn't work like that. This is a conversation.
And limiting it to an hour as well.
Exactly. And people again were like, well, what are you scared of? This is, everybody goes on the Joe Rogan podcast, and lots of big names go on it, and Trump's gone on it. So why don't you go on it? And it's like, okay, well, it's only the biggest podcast platform in the world. So, yeah, of course, she's not going to do it. That did not make any sense at all. That might be her team, but it showed weakness. And I'm not saying that necessarily swayed the election, because I think there was lots of other things that did. But that was a really poor decision to try and force Joe Rogan into their studio, especially when there was some rumors that she was using some form of earpiece when she was doing the debates. And I don't know if that's true or not, but either way, it would have been really nice to get to know her. And actually, I thought Joe Rogan was very fair when Trump started to say, she wouldn't be able to do this. And he pushed back. He said, no, look, I just want to sit down with her as a person and get to know her. And that's the whole point of doing a podcast. You got the time to actually learn about someone's personality, like strip out all the, I've got to give a smooth, polished answer to everything. Let's just talk and see where the conversation goes and find out how she is. So refusing to do that, I thought, was a big mistake. And, among lots of others. So, and then they're surprised. And obviously, let's talk about the UK government and David Lammy and the things that he said about Trump. If you were a politician, do you not realise that is no way to behave? You've got to be thinking about, you might not agree with people along the way, but you can't throw ad hominem attacks out like that in a quest to get short-term approval from a certain part of society. Yes, there are probably lots of people who hate Trump, but what's the point of saying effectively childish things? I think Kemi Badenoch is right in the sense that she's saying they like student politicians in the way they're behaving.
I think student politics absolutely nails it. And I'd also say that in the last election, I think that we would have voted for Trump had we had the opportunity to do. So if Britain was Democrat-Labour split to two parties, Democrat Republican, like America, then I think that the right would have been, a bit of sort of Farage and a bit of Conservative, and it would have muddled through with a victory. So I do think that the voice of reason lost the last election, and we accidentally ended up with a Labour government. We didn't vote for it, and I think that Farage is absolutely right. The next time, common sense will prevail, and I don't know what shape it takes. But I really hope that Tories and Reform aren't up against each other again, because that will split the vote, which is really unhelpful.
I mean, do you not think there's a cultural element to this, which is, before we came on air, I was talking with Charlie about this thing, the meeting I continually cite as one of the most important I've had in my life with Sean Corrigan over 20 years ago, where apart from him sort of poo-pooing the idea of anthropogenic climate change because the sun is the biggest source of energy in the solar system, he also mentioned he alluded to Gramsci's Long March Through the Institutions. And I would say that symptomatic of everything we're discussing is basically been the cultural climate has been one that's accommodated virtually nothing. It's siloed people into either people who are willing to talk about anything with an open mind, which has been an increasingly smaller and smaller constituency, versus the way that education seems to have gone, which is, well, we need to make sure everyone gets prizes and there are safe spaces for everyone. And I wouldn't even say it's student politics. It's like the politics of toddlers in a playground. It's completely infantilized everything. So we have a really infantilized culture now that doesn't permit free speech or open discussion. It just allows people that have a problem to become, to sort of flaunt victim culture over everybody.
Yeah, I'd agree with that 100%. It is strange that you can't have sensible conversations about many topics these days. And I find it, even my own family, I've got lots of nieces and nephews in their 30s, and they're left-leaning. I think it's a generational thing. Even they clearly didn't come from a family, their parents aren't, and for example, me and my siblings and my parents are all monarchists and slightly religious, not massively, but the kids aren't.
I mean, the fact that you've got, by all accounts, if social media is any guide, you've got a population of, or a part of the population in the States now, the female population, shaving their heads and forswearing sex because of Trump's victory. And you think, what has happened to our world?
I saw that picture, and I'm quite glad they're not having sex.
Because, I mean, I think I tweeted this at the time, which is, the last time I remember there was a culture of women being shaved, it was done to French women who were basically accused of being collaborators with the Nazis. Yeah. And the irony of this sort of speaks for itself.
That is quite ironic. But how do we get onto lesbian sex?
Well, let's get back onto market related stuff. So, I mean, obviously, something close to my heart is the fairly vicious correction in things like. I mean, I think it's probably all parts of the commodity sector, with the possible exception of oil. A lot of the commodities markets have corrected quite sharply in the last week or so. Do you think that's a sea change, or is that more of a blip in the greater scheme of things? The reason I would be more sanguine is because whatever Trump is capable of doing, he can't reverse, let's say, decades of underinvestment in energy and material infrastructure.
Yeah, sure. But I think what it's telling you, the softness in commodities, and I'd like to pick up on gold after this, but the softness in commodities, firstly, oil's already gone down. It's had a weak year, so hard to go down when you're already down. But things like copper and the precious metals have been selling off since the election. And I think that we shouldn't, the obvious thing is that commodities are a proxy for global growth.
Yeah.
And global growth is going to be slight, mainly because China's in trouble and Europe's in trouble. So you've got two big economic engines not doing so well. And let's face it, America's not roaring. It's relative. It's roaring relative to everyone else, but not compared to its own historic might. So it's a slow growth world, and I think commodity prices reflect that. Gold, I just want to talk about that briefly because I'm just about to write my next issue of Atlas Parcel, which will be out today, being Thursday, when this pod goes out. But I'm going to be writing a couple of things, a comparison with Bitcoin showing the extraordinary negative correlation between the two assets. So, Bitcoin goes up, gold goes down, and they're point for point, day by day, minute by minute. If Bitcoin sets back 1%, gold suddenly recovers and vice versa. So that's extraordinary. The gold conversation can no longer ignore what's happening in Bitcoin, is that first point. The second point I make is that the dollar went up. So, Trump caused dollar to go up. Why? Because the rate differentials between Europe and America have just gone bananas. And so Europe, which is seen to be a debt deflation trap, zero growth and falling prices. So that's going to have low interest rates again. The United States, we're not seeing that. We've seen interest rate futures go up. The one year is about 50 basis points higher now than it was a week ago. So that's pushed up the dollar, saying that if you want to get an interest rate, then you have to go to America. So that's good for them. Remarkably, the UK gilt bond market has been siding with the Americans rather than the Europeans. And thank God for that. I mean, some people are saying, well, the gilt yield's about the inability to pay our debts. I don't think we're there yet. I think you'll be surprised how these markets can take an awful lot. It's not. I'm not suggesting that the current debt is a good thing. It's not. But you've got a plan to get it down. And I think America's now got a plan to get it down through the Musk Doge initiative. Anyway, back to gold. So we had a strong dollar. We've also seen the yield, the bond yield, go up quite a lot, whilst the inflation expectations haven't. So the real yield's gone up 50 basis points as well over the past, over the last 2 weeks. So that has literally been another reason why you can see gold having slipped down in November. And then, of course, there are other things like the peace dividend. I mentioned the borders. So if we think that there's going to be less war around the Russian borders, then this whole idea of gold being a globally neutral currency suddenly became slightly less important in wars last month, because that would mean that we're going to see supply of Russian commodities and so forth onto the market. Maybe not this year, but at some point, you can now see a way forward for Russia to come back from the cold, to come in from the cold. So what, we always have the narrative that gold loves debt and deficits, gold loves geopolitical chaos, and gold loves falling interest rates, particularly falling real interest rates. Well, real interest rates are going up, dollar up, peace dividend. And debt and deficits in the biggest economy in the world no longer looking so bad. So there are plenty of reasons why you could be less bullish on gold post-Trump victory than pre-Trump victory. I think, on the other hand, if Democrats have won, then it would just be more of the same. But still, gold has had such a big run that maybe it was enough for now.
When you talk about the correlation between gold and Bitcoin, when did you notice it became stronger?
10 days ago.
Okay.
So trading, it's always been uncorrelated. I'll give you some examples. So what were the worst years for Bitcoin and the best years? Well, Bitcoin 2013 went up a lot. Gold had its worst year for our lifetimes, probably, apart from 1981 too. And then Bitcoin went up a lot in 2013. Then in 2014, gold was pretty stable and Bitcoin slumped. And then in 2017, not a great year for gold, but a great year for Bitcoin. And then 2018, gold, took off again just as Bitcoin was slammed. And then we had the non-correlation in the last 4 years in the pandemic era, where in 2020, you had a very, very strong gold market into the summer, from January into the summer, and Bitcoin really did nothing. And then in the autumn, gold slams and Bitcoin roofs it. And they just keep coming back and forth. And this is a thesis that I, gave credence to about not quite 10 years ago. But, I had always said own these two things because they're alternatives, and the new one and the old one. But my argument started to become more econometric and that sort of thing, really over the last 5-6 years. And I think when I created the Bold Index in 2020, the penny had dropped for me that these things are best friends. You need to own both and in the right proportion to maintain your risk. There's just no point having loads of Bitcoin and loads of gold. To do this properly, you want to make sure you have the same amount of risk capital in each. And of course, Bitcoin's getting less risky. I'm not talking about the price going up, making it less risky. I'm just saying it's the volatility and the liquidity of the market. The volatility keeps coming down and the liquidity of the market keeps going up. More and more jurisdictions accept it. It's now got a big home. Crypto's got a big friendly home in America, which is why I haven't mentioned, it's another big winner of the last week has been the fintech stocks. So all the global payment companies and companies like Tether, they no longer have to be so scared of the United States. So the biggest economy of the world has given crypto a home, yet it's still banned in the United Kingdom. I keep reiterating that point. There should be outrage at this point that people can't buy an ETF in Bitcoin. It's absurd.
But in terms of the overall trends, it's not like Bitcoin's making a new high and gold's making a new low. They're both close to all-time high. Well, Bitcoin's at an all-time high, but gold is off its all-time high, but they're both trending up. So in terms of being inversely correlated, they're not quite in terms of trend. They just tend to, I always think of Bitcoin as a non-correlated asset to whatever to whatever the dollar's doing, but tends to follow the kind of risk on profile when equities are up, and the basically when equities are up, when people are in a risk on mood.
Yeah, so correlation is not a directional term. It's showing, it's explaining price movements. A bit like volatility is not a directional term. It's just telling you what to expect on a typical trading day. How much a price would move. For example, Tesla is much more likely to move 5% in a day than Unilever. I mean, it's just baked into how the behavior of those assets.
But that's volatility, right?
That's volatility. Now, correlation is just the measure of, if one asset goes up and another asset goes down, how likely is that? Or do they both go? So gold and silver are highly correlated, even though one, of course, can outperform the other. Gold and equities, they can be correlated. They don't have to be. Gold and the dollar, those two are negatively correlated, but only when there's nothing else going on. So in a period of stable real interest rates, for example, and no geopolitical interesting events or something like that. So if the world is, pretty calm and real interest rates are flat, then gold and dollar will be very highly uncorrelated. But as soon as you've got a bigger thing coming along, like a big change in rates, then the dollar no longer matters. And so Bitcoin and gold, they've both been rising. The risk-adjusted measure is basically an IR of 23% over the last few years. So it's a decent trend. And you've got one 40% volatility instrument with frightening bear markets, and the other one a stable dull asset. It hasn't been that dull this year, but gold is generally slightly dull by design. And by pairing these two, you end up with a volatility of 15, 16, or 17, something like that. Much closer to gold, and Bitcoin is 40. So that's why I say to people, own both. But I really don't want this to be an advert for gold. I'm not trying to do that. I'm just trying to explain a key point, that if you want to understand gold now, you have to understand Bitcoin, because it's becoming increasingly important. I think what is gold? 17 trillion or something, and Bitcoin is either 2 trillion or something like that.
So if we look into the future and what may give us a clue as to where the top in Bitcoin and gold, or indeed potentially the equity markets, but if we look at Bitcoin on its own, I had a few ideas as to what might give us a lead into that. And first of all, I was thinking meme coins. So when they start to turn down from a technical point of view, we could also look at MicroStrategy. And I was thinking, would MicroStrategy, would they overstay their welcome effectively buying Bitcoin? Or would we see a similar thing to what you were doing in 2013, reducing your holdings in gold, because you can see, look, all the reasons for you holding Bitcoin has now pervaded the market, and now everybody's in and they can see what you had the vision for. And therefore, MicroStrategy might start to take profits and go back down. Or indeed, we'll see it in perhaps the fragmentation of the Bitcoin, against some of the majors, ETH, and although ETH has underperformed, and maybe the moves in the altcoin. So there's perhaps a few ways where we might be able to get an idea as to when the top's coming in. But I just wonder what you were thinking in terms of how you would gauge the trend change towards a bear market, and a sustainable one.
Well, there's a 4-year cycle in Bitcoin around the halving that's been pretty reliable. And you've always had a run up into halving. The last one happened in May. And basically, in the last two cycles, the two previous cycles, it took 6 months of consolidation after the halving hype, or the big breakout to all-time high. That happened in 2016 and in 2020. And it's happened again. And that's why one of the reasons we have a month called October in Bitcoin. It's always a strong month. It's a standout month. And October this year has been pretty good, slightly delayed by the election. And I think Bitcoin would have been strong anyway if Harris had won. It just would have taken a little bit more time to get here. It has brought forward the strength of the market. I think the important thing to realize about Bitcoin and gold from an investor perspective is gold isn't banned anywhere. I mean, anywhere you live, you can buy an ETF, or you can buy a bar of gold or a coin or whatever. Bitcoin is really hard to invest in for most people in most countries. Despite that, it's got to where it's got to. They tried to ban the banks from dealing with exchanges, so they invented the stable coin. They did that many years ago. The stable coin has been a financial revolution. $200 billion later, crypto became stronger as a result of the bank ban. Every time they tried to kick it with these sort of negative pieces from the ECB and this sort of thing, all of them are clueless and full of mistakes in their articles. Don't get it. It just gets stronger. And the US ETF came to be. The ETF's been around since 2015, the first one in Sweden, and they came to America in January this year. They've been hugely successful, raising tens of billions of dollars. And iShares Gold ETF in America, IAU, is now being surpassed by its Bitcoin ETF, IBIT. In AUM. Now, the biggest gold ETF in the world is GLD, not IAU. That's number 2. But still, iShares as a brand can sell more Bitcoin than they can gold. And they've had the other one for, 20 years or something. So that tells you a thing or two. But if you look at the shareholder register of IBIT versus IAU, IAU is a bunch of financial institutions you've heard of. And the IBIT top holders are a bunch of bandits and pirates, much more likely to be sort of hedge fund managers and wacky pension funds with a long-term view, as opposed to the sort of people that knock on your door and sell you the man from the Peru type product. So I think that's a big difference. And the global wealth management industry is estimated to be $128 trillion by UBS last year at some point. So, whatever it is, it's a big number. And the allocation of gold in their portfolios is probably 1 or 2%, something like that. Probably not as high as that, but something like that. Their allocation to Bitcoin is approximately 0. In the United Kingdom, a major wealth management center, it's banned, as I reiterate. So the wealth management industry does not own any Bitcoin. Hard to get bearish. I would think that this cycle, the pressure's on for that trade. And I would say when, your sort of high street bank balanced portfolio starts saying, I'm got 2% Bitcoin and start talking, and the young analyst starts talking about Ethereum, that's probably time to sell. But this trade goes on. It's just the world is so underweight. It's extraordinary. And that's, again, caused by this problem. I mean, don't forget, Tesla went into the S&P late because the authorities or the establishment didn't want it in. So it comes in and it's, rather than being built up slowly over time, suddenly there's a squeeze on the stock. The same's going to happen for MicroStrategy. Now, MicroStrategy, for those who don't know, is a sort of crappy software company, but it had $500 million in cash. And in August 2020 or so, Michael Saylor, the sort of celebrity CEO, stuck it all into Bitcoin. Then he borrowed money, bought more Bitcoin. Then he borrowed more money, and then he realized he got a share premium, so he sold more shares and then bought more Bitcoin. Now he's on convertible bonds. And the narrative is that he's basically got this huge pile of Bitcoin, and his company's market cap is basically 3 times, roughly speaking, the value of the Bitcoin. So we call that a premium. So he trades on a massive premium to net asset value. So, you just wouldn't buy an investment trust, 200% over the NAV or 250% or whatever it is. It's a big number. And the narrative is that this big pile of Bitcoin can make him a Bitcoin investment bank and make loans and put it to use, and they can maintain the premium and keep issuing new paper to buy more Bitcoin. I don't buy it at all. I just think it's an investment trust on a premium. Now, why does that premium exist? Because the regulators in most countries won't allow anyone to buy a Bitcoin ETF. Quite simple. If you allow Delta One products around the world, $1 cash gets $1 worth of Bitcoin. That's all you're asking for in a safe way using the stock market system. Then there'll be no reason for MicroStrategy. So the biggest risk to that stock is things like FCA approval. I think, when people talk about British soft power, I think one of our biggest soft powers is financial regulation. The SEC is an American indicator. It has no global presence. They just care about America. They couldn't give a stuff about the rest of the world. And they just try and protect the American market from the rest of the world. For example, we can't sell funds into America, as I'm sure all the people who are running funds will know. And if you try and open a bank account, or sell any financial promotion, you have to make sure no Americans look at this, and all these sort of rules where the SEC will slam you. But the FCA has been, for historic reasons, with strong links to places like Hong Kong and Singapore, and of course to the European Union, because they were the lead regulator in those days, that they're a soft power. And so I think that the the Bitcoin ban by the FCA in 2020 on 6th of October, coming into force in 1st of January 2021. They announced that on the same day. Ruffer announced they'd bought Bitcoin, which I thought was quite amusing. And Bitcoin went up sixfold just after they announced it. And they put the ban at 10k. Bitcoin's now 90k. They're 9x offside. Because they thought they were saving the world, but they knew it was a Ponzi scheme that was going to zero. And this is the problem. We've got a situation where they have allowed Bitcoin ETFs to list on the London Stock Exchange, but only in the professional market. This didn't exist before. They're making up the rules as they go along to make sure that the public can't buy Bitcoin or can't own it. And if you're running a Jupiter fund or a Barclays Bank Balance Fund or whatever, you cannot put Bitcoin into it. You as a retail investor cannot go to Hargreaves Lansdown and buy Bitcoin. They won't sell it to you. And this is a huge problem. And they really, really hate it. So they must be a bit confused about what's happening, where our allies, the Americans, are saying, well, we're going to have a strategic reserve and we're going to embrace all this stuff. And over here, we've still got it banned. So it's a big thing. And I can't say that Bitcoin is I'm certainly not thinking it's a sell until the global wealth management industry owns it like they do gold.
So
they don't really own gold, but to any real extent. It seems to be central banks almost exclusively have been making the running this last few years.
Yeah, so their positioning is light compared to what it was in 2011. The global wealth management industry didn't buy into this rally as enthusiastically as they did last time. But, so what? They're still there. I think another problem there is regulatory, because if you look at the benchmark of whatever, if you're in the wealth management industry and you look at what your benchmark is, it will basically be some sort of derivative of a 60-40 balanced portfolio, 60 equities, 40 bonds. And you're basically, the risk department in that company, which is now, which didn't exist 20 years ago, but now is more important than the front office, is terrified of the idea of going off benchmark, and gold's not in the benchmark. So I think one of the reasons why the wealth management industry has sold gold is because it's not in the 60-40 mix.
Mm.
So with regard to a long-term strategy, when we eventually see this all in from the investment community, you'll be looking to get out, presumably. Will you then, is it like a perma sort of long-term position, like holding gold, that you always want some Bitcoin, you always want some gold? You're just going to reduce the weighting when you think sentiment's gone too far, and then you'll be looking to buy on retracements? Or do you think there is a possibility that at some point, I mean, this is a difficult question, but do you think there will be some conceivable future where they do manage to ban it in some way and render it redundant, which is obviously something you can't do with gold, but you could potentially at some point do that with Bitcoin?
I don't know how. I don't think it'd be worth the money it is if you could switch off Bitcoin. And as I reiterate, it's now got a home in the United States of America. It's always had little homes in places like El Salvador and what's the other place? I forget. But there's always been little places. You only be running one node on one PC for Bitcoin to stay alive, and there are thousands of nodes running around the world. I always remember there was one in the middle of Iraq during the war. So it's extraordinary how resilient this system is, and I think it is the in those terms, in terms of security and supply, it is digital gold in all but name. The demand side of both assets are completely different. One is much more established in macro, whereas Bitcoin still had a growth catch-up element about it, and I think that's the trade we're seeing right now. But you can't ban Bitcoin if the USA is on side. They can have a strategic reserve. That's a pile of Bitcoin in a vault next door to Fort Knox, officially part of the system. I don't see a future president being able to change that. And here in Britain, we just sort of sit here with twiddling our thumbs. The confiscation of Bitcoin in Britain has been huge as well. We have, I think at the last count, about $5 or $6 billion worth of Bitcoin sitting in Her Majesty's Treasury somewhere. And, it's going to make people think. It's going to embarrass a lot of people who called it a Ponzi scheme 10 years ago, 5 years ago, 3 years ago, 1 year ago. And the establishment can't get their head around it. They can't get their head around the thought of digital assets. And I go back to what I said at the beginning of the pod, which is, I was a skeptic in 2012, and then I realized you couldn't cut and paste it, and the blockchain provenance works pretty well, and then I became a bull. And to the point about allocations, well, the whole point of Bold is to take that problem away from you. Because, if you like the idea of Bitcoin and gold, these sort of off-grid liquid alternative assets, well, the Bold Index combines them in a very efficient way. And if Bitcoin gets out of hand and starts to see increased volatility, your weight goes down. If the price goes through the roof, you keep rebalancing every month, bringing that weight down, banking profits, adding it to gold, and you just keep going. So I think the idea of splitting your Bitcoin and gold, holding both in the right proportion and rebalancing regularly is a very sound approach. And I just wish that more people would agree with me.
Yeah, Rishi Sunak at one stage, I know the point's moot, but he was talking about London or the UK being a financial centre for cryptocurrencies, and I thought, wow, this is great. We're taking the lead, yeah. And then obviously that's all by the wayside.
Yeah, because I think they've got operational independence. You remember Liz Truss complaining she couldn't fire the head of the Bank of England, the governor of the Bank of England. And I think all of these sort of bodies in this country, they're so powerful, these sort of quangos and non-government entities, that the government doesn't have nearly as much power as you think it probably does. So there's lots of things the government can't do. And I do believe that it came up with the Treasury Select Committee. People like Steve Baker MP were on side for this. Rishi Sunak was obviously there. I'd written a letter that went to number 11 when Sunak was there, and it was delivered by Steve Baker. And still, it just didn't happen. And we made the case that the safest way to Bitcoin is an ETF and that sort of thing. And the ban carried on regardless. I don't think the government had the power to order them to change it. I don't think that's how it works in Britain anymore. Which is part of the reasons why we're overregulated and nothing can get done. Didn't Musk make a very good point, saying the problem with regulations is you just stick the new one on top of the last one, and so it only ever grows. And so you've actually got to reassess it every now and then, and say, okay, we no longer need that one anymore, and tear it down, or rewrite it, or update it, or whatever. Presumably that is a very common sense approach on how to run a country. And it's, a very good example is our tax code in the UK, which no one understands. And every budget makes it more complicated than the last. Both parties are guilty of that. It's absurdly complicated. And obviously tax is too high. That's another matter. They're also too complicated.
I'd go back to the discussion on gold and Bitcoin and say, taking, say, a 12-month view for both, what would your assessment be, long or short?
If you'd asked me this time last month, I'd have been very bullish on both asset classes, which even I shouldn't have done that. I should always have a favorite. But I've been extremely bullish on Bitcoin this last few months because October was coming. We've been expecting a breakout all year. And I've been very much in the camp of calm down, don't worry, Bitcoin's not over, it's okay, it's had a lull in the summer, wait for October. And that's been spot on. So the breakout I got right. I didn't realize that Trump was going to be quite as good for it as it has. And I think the inverse correlation has, I didn't call it because I didn't really call a Trump victory or predict it. I did make one stock recommendation in Bytetree Venture, our portfolio, so our sort of mid-cap, small cap. I recommended Forexpo, the Ukrainian iron ore company, a week before the election, saying if Trump wins, this is going to be a good stock, and that's been right. But I didn't see gold as a sell. It never occurred to me that gold would go down on a Trump victory like it has done. So that has been a surprise for me. But, it's not a surprise that Bitcoin's gone up, but it is a surprise how much it's gone up on the back of a Trump victory. I thought it was going to go up a lot anyway, just because of the seasonality of Bitcoin. But yeah, so I think over the next year, going back to the 4-year cycle, there's another good year ahead for Bitcoin. Last time it was interrupted in the equivalent of April next year by China, who basically banned Bitcoin mining at that time. But I think that we've got so much flow now, and this $128 trillion wealth management industry allocation is coming, and it's going to happen slowly and steadily over time.
And a 12-month view on gold?
I think that I wouldn't want to be bearish, but I think we probably I can't see a new high in the next 12 months. I think we're in for a period of consolidation. I mean, it would be a real So the price is $1,352 is the fair value on the old TIPS model that worked really, really well until 2022. So that would be a 50% decline in the gold price. But I don't think that's going to happen, because I think even, as I've been writing for the last 2 years, the world's relationship with gold has changed. And if you think about the brief history of gold, the long history of gold, it's had many different regimes over different periods in different countries. It's originally a fintech trade, pre-1970, before telecoms and computers. It was accepted around the world as payment by physical delivery. And then since 1970, we've had the fiat monetary system enabled by tech. Communications. You couldn't have had such a vibrant FX system without modern communications. So that's an important point before we get to the point of, that led them to borrow too much money and that sort of thing. That's another thing. But we've got it because we can have it. And the last few years have been characterized by rising real interest rates. And the reason gold's at a premium on that old model is because gold didn't get slammed during a period of rising real interest rates. So that's telling you it's had a one-off revaluation. That's how I see it. And how we calibrate it now is complex. The World Gold Council, and I wrote about this last month in Atlas Pulse, they came up with an expected return framework for the gold price. And they use global nominal GDP as a sort of the long-term tracker of where it ought to be, which is basically a 7% per year. And Tim, what do you think of that? I don't know if you saw that, the glitter, as they call it.
No, I haven't seen that, but I think your analysis on Bitcoin and gold is probably a fair one. So I'm not that bearish myself on gold, but I acknowledge that it may take a little bit more time of consolidation before we see some more progress to the upside.
And it'll be back. 100% it'll be back. And the gold mining shares, whilst we're on it, they haven't even priced $2,000 gold. So $2,700 gold. So the gold price, miners are just, they're going to keep banging out good earnings, even if the gold price corrects a little bit. I don't think the gold price correction is going to be that much. But I think the World Gold Council, they've chosen this world nominal GDP, which kind of makes sense, which it caters for the idea that if there's more people in the world and more economy in the world, then gold should have its fair share of the system. And so I like that idea. It's very simple, and why not? And of course, it's world nominal GDP is the same as world money supply. The only difference being the velocity, which, let's face it, no one understands what that is anyway. And so the Austrian school, people like Tim, and probably to a certain extent me, would say, oh yeah, the money supply, they're printing money, gold goes up. Now, when you print money, world nominal GDP also goes up because it's inflation and growth. As it's been pretty strong in the last few years, as we had, up until the last year, we've had a very high nominal GDP growth, and so that makes sense. But if you're in an expected return framework conversation with a pension fund advisor, and you start talking about the money supply, they'll think you're a crap Austrian. But if you talk about world nominal GDP growth, then they don't think that. They just go, oh, that's very sensible, that's very Davos. And so you like growth, and this is a growth asset. So you're really rebranding it, but saying the same thing, which I think is genius. So John Reed, I saw him last week. He's the head of strategy at the World Gold Council. Lovely bloke, old friend, and I was congratulating him on their expected return framework and the way it's been presented. So they're presenting gold as a growth asset, which I think is really clever.
So in terms of the element in the equation that I think is really important here is that the other outcome from the Trump victory, whether it was destined or whatever, was the big move up in the dollar. In fact, it was quite frustrating to see that the only credit that the mainstream media gave to the Trump victory was that the dollar had rallied so aggressively, and they tended to ignore the fact that stocks went into a new all-time high, and Bitcoin as well. So they didn't want to acknowledge that, and you could just see it was through gritted teeth that they had to find something, but decided to ignore what would be regarded as a big win from the markets, a big vote of confidence. But this move up in the dollar has been absolutely massive. It's squeezing 107 on the dollar index as we speak. And that's a high going back to November 23. So the fact that the dollar is so strong at this point will put pressure on gold, I would have thought. But the overall chart has been range bound pretty much since November 22. So it's been trading in this big range. Potentially, we could be at the top of that range. And if the dollar then starts to fall because this premium or whatever is now kind of factored in, and people start to look at Trump policies as potentially using the dollar as a weapon to increase growth, then it might start to go down quite fast from here, and that could support the gold price quicker than we expect. Also, from a technical point of view, it is unlikely that the market would just top out on one sharp move up and then down again. It usually comes from kind of panic buying, and that's not happened either. So it looks to me more like we're just going to range trade potentially for a few months. Things go a bit quiet, and then it's just going to keep going up.
Well, I have to say the dollar is space rocketing in. And I reiterate that, the dollar is not that important for gold. People exaggerate it. It's basically a negative correlation when nothing else is happening. But right now, something else is happening. We've got the peace dividend. We've got the change in the US budget. People are going to start taking austerity more seriously, you would think, if led by the US. And then we've got the rate differentials. Rates are coming down in Europe. And they're going up in America. Well, not necessarily going up, but they're not coming down in America, according to new forecasts. And so there is a genuine fundamental reason. And it could be that gold in non-dollar terms, i.e. gold in sterling, really doesn't fall that much. And it's so far that if you take the dollar out of it, the sterling or euro measure of the gold price is down far less. So we shouldn't panic on gold. And I reiterate, the rates model, which did work very well for 20 years, no longer works. Something's changed in the last couple of years, and I think that's structural. So it is difficult at the moment in the sense we don't have a clear anchor of where the gold price should be. But using the world, the 60 years of data for I didn't finish what I was going to say earlier, the World Gold Council's new glitter model, then I think gold's about 11% overvalued or something, which is really nothing. So I wouldn't even panic, and I would reiterate that the miners offer huge relative value, and as the quarterly earnings come through, they're going to positively surprise. Whether the market rewards them or not is another matter. But before we go, do you mind if I just we move on to the S&P and global market outlook?
Oh, sure, absolutely, 100%.
We sort of being gold, Bitcoin, and anti-Labour government, which is fine. What else is there?
Well, I was going to ask you what else you wanted to say, but I was detecting that we're probably getting near the end.
Yeah, sure. So the Goldman Sachs note, which I've just been reading, and I'm wondering if I'm going to write it up, on the expected return of the S&P for the next 10 years being 3% nominal, which is basically the 2000 to 2008 call reiterated, isn't it? This idea that you've had a big bubble in tech stocks and then the index has a lost decade. What do you guys think about that?
Well, what it will just underperform the main indices, or it's actually a bubble and it's going to implode.
The 10-year low nominal growth forecast is a polite way of saying implode, but it just means over a 10-year period your returns would have been 3% a year rather than they've been, which is
10 years is such a long time to that could encompass a massive move up and then a massive move down. So for me, I wouldn't really be paying much attention to somebody who says a 10-year forecast, because I think there's much more upside to come, and then we will hit a point, especially the way people have been talking about technology and AI and all this stuff. It feels very much like we are approaching some form of dot-com boom and then bust. So within that, I think there's tremendous volatility. So how tradable that is, I'm not sure. But
so we're talking about the 10-year forecast, which has nothing to do with going up and down in the middle. Of course, it's going to go all over the place.
Yeah.
But they're saying that when it's trebled over the last 10 years or whatever, it's going to do very little over the next 10 years.
Yeah.
And of course, that means lots of volatility, lots of ups and downs, of course.
Well, yeah, I mean, but what I'm saying about that is you could say that about any market, and it's what do you do with it? You just say, okay, it's going to underperform. So what do we do? It might actually underperform, but outperform, the Dow, or it might outperform gold. It's like, it's just saying that, okay, it's not going to do as well, but what does that actually mean, and how actionable is that as a call? So that's all I'm saying here. What do we do with that information? Yes, it is possible, but perhaps over 5 years it could do that, and maybe not over 10. I don't know, but I think that I look at markets as a destination, and like looking at a map and saying, well, where am I going to go to? And that's effectively looking at potentially a few round trips before, we've actually taken one trip, if that analogy makes sense to you. So, I'm more interested in what will give us the signal of the high in the market, in the way the market's trading here, and then measuring sentiment to see where the low will be. And I think that would be possibly within the next few years. That's when we would start looking at that. And so there's a few steps to get to before we can start talking about 10 years being underperforming. But, it's an interesting call, given that we did see the high in tech stocks in 2000, and then it did take, as you were saying at the top of the show, it took a long time for that tech call to come back in, and eventually I guess there will be some new tech that we hadn't thought of that will then drive the next boom. And I was thinking about this the other day, what could be the next big tech thing that people aren't talking about? And one of the things that occurred to me was that the CRISPR technology, the biotechnology that could effectively, genetically engineer people, that might be the next big thing. In many ways, it's bigger than anything that has existed, AI included. So the interesting thing about AI was it's not a new thing. Like, people think this is a new thing. People have been looking at AI since the 60s. It's only that the technology has allowed us to bring it into the mainstream with the power of the computers that we've got now. But the theories behind it have been around for a very long time. And then you had this sort of introduction to ChatGPT, and then it just went as this massive, change in people's understanding of what it could do. And in many ways, it's mirroring what's happening with Bitcoin. People just ignored it for a very long time, and then we're slowly seeing, or quickly, depending on how you're viewing it with the price action, people move towards suddenly getting this aha moment. Oh, this is actually a really big thing, and we should be on board. So, that's discounting the fact that there may be some other massive technical breakthrough that they haven't thought of that could drive the next tech boom. So, yeah, 10 years, I think there will be something else that will come along. That will drive the next boom, and so I wouldn't say that's. I wouldn't go with that. I'd say yes, this one will peter out, but something else will come along.
Right. So I thought this podcast was a big fan of the sort of KP ratios and those sorts of things, the Cape-Shiller. Tim?
Not necessarily. It has a role, but it's very long-term thing. It's a bit like a reversion to the mean. It takes place over a very long period of time.
Yeah, sure.
I mean, no one's.
No, because it's, we have had, unusually high return period going over the last 100 years for the S&P 500, and the divergence with the rest of the world is unusually large. I mean, really, really off the charts compared to what we've ever seen before. And I think that at the back of my mind, I think one of the biggest risks to this era is Trump may be really good for the US economy, but the stock market's just done too much with all the excesses of the Biden era and the Trump era before that combined, and so much of it's these few big stocks which are at much higher valuations than they are at growth rates with all except Nvidia. But Nvidia will be competed away at sooner or later. Amazon are talking about their own AI chip, and so oh Christ, the other company, slipped my mind because I'm on a podcast. But
Microsoft?
No, AMD is AMD.
AMD and Nvidia. Yeah.
And so the competitive advantage of Nvidia won't last forever, particularly if prices are this high. They'll come, and so one by one, I think that these incredible tech giants that have been created, they'll start to be eaten away at, and I think that America will start to look like the rest of the world. So I do think a lost decade for the stock market is looking increasingly likely.
Well, the other factor is that's very underreported is that there is no real correlation between economic growth and stock market performance anyway.
In the short term, that's true. In the long term, that's not true. But, if a country doesn't grow, then the stock market's not going to go up.
I wouldn't disagree with your view on that, by the way. With regard to AI, I think we talked about it on the pod actually before, how NVIDIA it led the way because it had the chip. But of course, the technology will help all businesses, I feel, at some stage with efficiency. So that you get this transfer of, okay, that goes too far because people get overexcited, as always happens in the markets. But then the real economy actually can perform better because they're actually getting these effectively like being given new computers that are much more efficient and they can run their businesses better. So you get this trickle down effect, like from Formula One into the average car. So yes, that is definitely overdone or will become overdone because it's a late stage now. And also the chips, the advantages, yes, they will be making more and more chips, but what happens when companies make a lot of money, other companies come in and start to compete. So very naturally that has to be eroded. So that makes a lot of sense in that area. It has been exceptional and will need a correction. It's just a question of over 10 years. I was just thinking, well, there will be something new that comes along. And it in terms of the AI story, that may not be, I can see what you're saying there. The AI story will overshoot, but something else will come along, I think. So that's a really interesting point that it is on those scales. Now, I don't look at them. The first time I've heard it mentioned is actually you saying this now. I mean, in terms of the podcast, we will look at anything and everything that people feel is relevant.
Yeah, I mean, it's the 10-year expected returns are a sort of academic thing. They're a way to sort of legitimize the stock market and pretend it behaves in a very rational framework, which of course it doesn't. But over the long term, the academics, do tend to have a point here, and I think that if you look at people like Case-Shiller, and they can equate value today with 10-year expected returns, and it sort of works quite well, has done in the past. But we have had an extraordinary boom with an extraordinary surge in the money supply and massive deficits. And I think the last, I don't think we're turning the tables on the interview here. So if we did have what looks like to be a pricey market, and we're going to buy bonds, how terrifying if Musk is right and budgets can be balanced, then is it terrifying to buy government bonds again?
Yeah, that's a good question. I suppose it depends on the level of inflation.
Well, I mean, we're talking about deflation in China, aren't we? And the Eurozone. America, not sure yet.
Well, I don't think deflation is a story for America at all. There's no evidence of that. But yeah, I mean,
well, I don't think it could survive it with a $36 trillion national debt.
Yeah, but so that's the point, Tim. If they balance the books, then the debt will, take care of itself over the years. They'll grow out of it.
But this is why one of the first questions I asked you was, do you think that this sort of Trump euphoria is overdone? And my sense is that it is because, well, I've got the greatest respect for Trump as a political or a business operator, and I've got the greatest respect for Elon Musk. That's set against, a bureaucracy of however many million people and, the deep state et al. So I'm just saying I don't think it's as cut and dried as say the performance of the dollar and the price of gold is currently suggesting.
Yeah, but I think it's going to be one of the most interesting. It's where I'm going to be watching. the most closely, because if there's a model for how to slash government spending, and
they may well be creating it.
Yeah, they're creating it. So we've had the inspiration from Argentina's Milei. Trump's doing it on a big country, and then Europe's going to be watching for the side. Northern Europe will say, well, we've always known how to keep our government efficient. The rest of Europe, especially United Kingdom and France, will be going, oh dear, and Italy and Spain, those sorts of things. But we'll be, oh my God, this is what we can do, and it will be a real wake up call. And when you hear that the MOD has got more personnel than our Navy and our Air Force, sitting in some, on a desk somewhere, eating biscuits, not running around in the cold like I used to do.
And that's directly comparable to the number of managers and middle managers in the NHS versus, say, doctors and nurses.
Yeah,
for example.
All that stuff. And I think that Palantir Software with Musk and AI and stuff, they can just throw this at the government. And then it's just they're going to use social media and PR to win the arguments in a way that fact-based. And make the changes that we've been talking about for years. How do you reform the NHS and this sort of thing? And if they can do it over there, then the public will be desperate for it, and that will be government in the next election. That policy, and it won't be called austerity, because austerity sounds mean. Austerity looks at the amount of benefit you give away, or
just call it balancing the books.
Yeah, which is sort of historically the moral case of what governments did when in office, and people will get it.
I just wonder when or if they will decide that a weaker dollar is a really useful weapon for an engine of growth for the US. So if they decide to have that as a policy against China, because obviously that's China's way of getting out of deflation, to have a weak currency, and they do not want it to strengthen against the US dollar, that could be some battleground that switches. And that's why I think that might be quite an interesting thing to focus on, particularly when we're looking at the gold price. If they do that, and I don't expect them to come out and say it, because given what Musk has been saying online, I think he will be influencing Trump to a certain extent. But Trump, I would say, if somebody says to him, look, why don't we just get this dollar down and it will just help American businesses, he's the sort of person to go, not really think about it and say, yeah, let's do it, and off you go. You end up with what looks like a Goldilocks situation. You've got the stock market going higher, you've got businesses making bigger profits, and you've got America outperforming on the global stage because their currency's weak. And as long as inflation looks like it's not causing any problems, it doesn't look like you're doing too much damage. The only problem with that is that all comes further down the pipe, and then you get hit with this big problem where, inflation's starting to get out of control. We got to start raising interest rates quicker than expected. And that's where you get this big about turn in the market. So I'm not saying that that's going to happen. I'm just saying that that's something I'm on the lookout for. In the same way, when I was talking about Bitcoin, it's not that I necessarily think that it will be banned or could be banned. It's just that I like to look for these low probability, high outcome situations and think, well, is that possible?
Yeah, so on the dollar, the dollar is quite rich on a purchasing power basis, which is a long-term measure of currency value. But of course, it's supported by the rate differentials. But the two outliers in FX land, the outlier in FX land is the yen, not the renminbi. The renminbi's been quite strong these last few years.
It has.
And if you look at it in a global basket, so I think that China will need to devalue, and they have a good excuse. But I think that will come probably with some tariff pressure. That will be part of the negotiation of how they get out of this. You have to devalue in these situations. This is why Britain survived when we left the ERM unexpectedly in, was it 92?
September.
Yeah, nothing like a devaluation to sort you out. This is why in 2009 we recovered faster than Southern Europe, because we had a weak pound. But you don't devalue your way to prosperity, as it's famously said. You grow your way with high productivity. That's how you become prosperous as a nation. The Swiss didn't get there by accident. They've had good discipline in their fiscal situation for many years. But I think the yen is the obviously undervalued currency in the world. Their rates are too high. The differentials don't make any sense, and their inflation is no longer. They no longer have the deflation. So I think Trump's going to put a lot of pressure on the Japanese. And that is the standout currency to own, I believe. And I don't think the Chinese currency is overvalued like some people say. As for the rest of them, things like Europe and the UK, they're all about right. You can't really complain about the purchasing power of most currencies in the world. Dollar a bit expensive, yen dirt cheap. But as I say, that the outlier, I think, could be that equity returns for the next 10 years are a bit more challenging. Very good news for active managers, by the way, because it means you can go and hunt down special situations, and it's easy to outperform, like it was between 2000 and 2008. Much harder after the credit crisis to outperform than before. So that will be good for the active managers. And I think the surprise might be bonds aren't the toxic waste that they once were, because maybe people could finally see an end to tax and spend.
That's brilliant.
Tim,
Tim,
the thought, certainly.
Yeah, exactly. I was thinking that's a perfect way to end the pod, unless there's anything that we didn't ask you that you wanted to talk about.
No, I think in my private life we can keep that out.
Tim, was there anything that you wanted?
No, I've
to
got
ask?
nothing to add.
Shall we go to media picks? Would that be okay?
Let's go for it.
Yeah. Okay. Charlie, you may have forgotten we do this thing at the end where we.
No, Charlie's been well briefed. He knows what's coming.
Fantastic.
Yeah.
Tim, do you want to go for it?
Okay, I'll go first. So mine is actually a little blog or a sort of internet essay by Jeffrey Tucker of the Brownstone Institute. So the address is brownstone.org, which I would suggest is basically a sort of libertarian type think tank that supports free speech, the rights of the individual, et cetera, et cetera. The title of the essay is called "The Neoliberal Consensus is Coming Apart." It's on the Brownstone site, but it's basically a little history of what life's been like since around 2020. And it strongly suggests that one of the aspects of COVID was the COVID crisis was designed to basically drive a coach and horses through what Donald Trump was managing to achieve on the trade front at the time. It's a fascinating history, or a fascinating take on recent history. And this was written before the election. The Trump election is clearly, as we've discussed today, has changed a lot of the territory. Nevertheless, I think Jeffrey Tucker is a fantastic writer. And it's just, again, food for thought for anyone that's trying to work out what is happening in the world and in the States in particular, and why perversely it's almost impossible to get too excited about what the Trump 2.0 means, because it's in part maybe hopefully a sort of terminal hammer blow to the power of the deep state in the US, and dare one hope maybe elsewhere in the world as well. And it's called "The Neoliberal Consensus is Coming Apart." It's available on a site I would recommend to anybody, which is brownstone.org.
Fantastic.
Great.
Charlie, what have you got for us?
Well, I was going to talk about the Boris Johnson book, which I'm Unleashed, which I'm reading at the moment. But I think we kind of covered that. I mentioned that one. Well, there's also another book I've just arrived. I started reading it. It's called Seasons in the Sun by Dominic Sandbrook, about UK during the 1974 to 1979 era. I think that's probably quite timely. But the real thing the bit of titillation, my wife and I thoroughly enjoyed Rivals, the Jilly Cooper series on what channel was it on? It was on Disney Plus.
Oh, there goes the neighborhood.
Oh, it's absolutely brilliant. It was one of the first sort of 8-parters that I just thoroughly enjoyed. Shameless entertainment, full of frolics, absolutely hilarious, great acting, brilliant cast. And highly recommended, Rivals.
I don't know. Have you guys ever seen the film The Score with Robert De Niro and Ed Norton?
Yeah,
I don't think so.
Oh, okay. Fantastic film.
Ed Norton's always watchable. De Niro as an individual lost a lot of credibility recently, but as an actor, still the earlier stuff will hold up.
And Marlon Brando's in it as well. So,
okay.
Yeah, The Score. It's an aging thief hopes to retire and live off his ill-gotten gains when his lover, when a young kid convinces him to do one last job. It's that one last job.
One last job. Oh,
exactly,
yeah,
and then I'm out.
Fantastic.
Yeah, it's great entertainment. So I thought I'd recommend that because it's I think a bit of a gem that's got missed.
Who's the director?
The director is Frank Oz.
Oh, the Muppets guy.
Yeah, brilliant. So Charlie, thank you so much for coming on the show. Really fantastic to have you on, and it's been a really great chat. Just before you go, could you just remind everyone where they can find you?
Yeah, fine. So I'm on Twitter at Atlas Pulse. Pulse as in heartbeat, and Atlas as in map. So that's my Twitter handle, and I'm on LinkedIn and that sort of thing. And the website is bytetree.com. Atlas Pulse on Gold. I write once a month, writing it today. It's free, lots of free stuff. And if you care for our paid source, they're there for you too. But no pressure.
And that's Bytetree with a Y.
Right, yeah, but bits and bytes.
Yeah.
So Bytetree was named after the idea of a digital money tree.
We'll put notes in the show notes. That's fantastic. Thanks again, Charlie, and hope to see you soon.
Thanks, gentlemen. And don't forget, we need to have lunch. It's been too long.
Absolutely.
Indeed.
Take
Indeed.
care.
Onward and upward. Excelsior. Thanks, Charlie.
Thanks, chaps.
Cheers.
Take care. Bye. Thanks, everybody. This podcast is for entertainment purposes only. Please do your own research or contact a professional advisor.